अंतरिक्षं शान्तावुदन्वतीरापः शान्तावसन्तोषदीः शान्तानि पूर्णरूपाणि शान्तं न अस्तु कृताकृतं शान्तं भूतं च भव्यं च सर्वमेव क्षमस्तु नः सर्वमेव क्षमस्तु नः इयं या परमेष्टिनी वाग्देवी ब्रह्म संशिता ययैव ससृजे घोरं तयैव शान्तिरस्तु नः तयैव शान्तिरस्तु नः इदं यत् परमेष्टिनं मनोवाग्ब्रह्म संश्रितं येनैव ससृजे घोरं तेनैव शान्तिरस्तु नः तेनैव शान्तिरस्तु नः इमानि यानि पञ्चेन्द्रियाणि मनः शस्तानि मेहनि ब्रह्मणा संशितानि यैरेव ससृजे घोरं तैरेव शान्तिरस्तु नः तैरेव शान्तिरस्तु नः पृथिवी शान्तिः अन्तरिक्षं शान्तिः द्यौः शान्तिः आपः शान्तिः औषधयः शान्तिः वनस्पतयः शान्तिः विश्वे मे देवा शान्तिः सर्वे मे देवा शान्तिः 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 शान्तिभिः ताभिः शान्तिभिः सर्वः शान्तिभिः क्षमया मोहं यदिह घोरं यदिह क्रूरं यदिह पापं तच्छान्तं तच्छिवं सर्वमेव क्षमस्तु नः सर्वमेव क्षमस्तु नः
Good morning, everyone. I hope you can hear me. No?
You have to be
Little louder. Okay. I adapt to the technology now. May I please request all of you to switch your mobiles to a silent mode, and then we are ready. But hello, everyone, and wonderful to this very breezy morning in Bangalore. I hope you're already enjoying the weather, people who are from outside. And a very warm welcome on behalf of Srishti Manipal Institute of Art, Design and Technology. I welcome all the guests, all the dignitaries to this inaugural session of the International Conference on Design-Led Innovation to Foster FinTech Ecosystem in Emerging Economies. I'm Priya Joseph. I'm a part of this 150 strong and diverse group of Srishti faculty, and today I have the privilege to take you through this program. As we host this FinTech conference at an art and design school, we celebrate a powerful convergence of disciplines. This is evident in the word technology in our school's title, but also becomes much more apparent today with all of you in the audience for this conference. And you know, when I was accepting to do this, I was asking Sanjukta many questions, our organizing committee secretary, to understand what the conference is really about, as my training is as a designer and an architect. But Srishti becomes quite a place to host this conference in that sense on financial technology, as the group at SMI comprises of technical people for sure, but equal number of artists, designers, social scientists, and more. And I think you will agree that radical thinking that arrives from this convergence of disciplines is definitely something that makes an impact. And this conference really seeks to do this. Financial technology, like you all know better than me, is no longer driven solely by algorithms, infrastructure. It is increasingly shaped by design thinking, human-centered innovation, creativity, and of course, inclusivity. At an art and design institute, we believe that meaningful innovation occurs when technology is informed by empathy, by aesthetics, by sustainability, and of course, social impact. So, seeking this exactly at this dialogue that we have between academia, industry, policymakers today, I hope you will all take back fruitful insights. We are honored by the presence of some of our distinguished guests here, whose expertise and leadership continue to shape our future, technology, finance, and innovation, like you will see in the next 2 days. I request our dignitaries to come on the dais to light the lamp, which has been a symbol of wisdom, knowledge, and prosperity. I invite our chief guest, Sri Raman, who is the chairperson, Provident Fund Regulatory and Development Authority. Please, sir. And Dr. Raghavendra Prabhu, Additional Registrar and Director, Administration at MAHE. Professor M.H. Bala Subramania, Professor, Director, and Department of Management Studies, Indian Institute of Science, Bangalore. Also, Mr. Shibu Sebastian, who's from Canara Bank with us. Mr. Akshay Bapte, Program Manager of Campus Founders, NSR CEL IIM Bangalore. And of course, Dr. Arindam Das, Director SMI and the Conference Chair, Professor Ramesh Kalkur, our Associate Director at SMI, and Dr. Sanjukta Ghosh, Secretary, Organizing Committee. Please, if you could come and light the lamp.
Jnana
express our gratitude to our esteemed guests. We'll wait a moment. Vishnu's are back. I request some of our students to bring in. I requested Professor Ramesh Kalkur, Associate Director, to please do the honors. Sri Raman, thank you for being here. Professor Bala Subramanya, thank you, sir. Dr. Shibu Sebastian, thank you for being here, sir. Mr. Akshay Bapte. Also our very own Dr. Raghavendra Prabhu, thank you for being here. And Dr. Arindam Das. Both our students, Aditi and Sunita, to please felicitate Professor Ramesh. Thank you. I now invite Dr. Arindam Das, who is the director at SMI and also the conference chair, and has been a keen proponent of innovation, AI-led solutions, and has really been at the helm of this very interdisciplinary team, which is sometimes confused, but doing a lot of avant-garde work, which is happening at SMI. So please, sir, if you could do the honors.
Thank you, Priya, and respected members on the dais, Shri S. Raman, Chairperson, Pension Fund Regulatory and Development Agency, Authority, our National Speaker, Professor M. H. Balasubramaniam, who is a Professor, Department of Management Studies at the IISc. We also have our guest from the Canada Bank, so your name is not there. Professor Raghavendra Prabhu, who is the Additional Registrar, so Ramesh Kalkur. And if you're wondering what happened to the name placard, it's called Murphy's Law, because yesterday evening all the printers decided to go on strike. Okay. So if you're wondering, I'd like to put that at rest. And you also must be thinking, what is design doing with FinTech? But if you look at design, we look at design very differently. We look at design in terms of impact and not just aesthetics. So we are very, very diverse at SMI. I'll come to that, but before that, a word about the conference. We are looking at how this conference will focus on design-led innovations for FinTech ecosystems in terms of insight generation, collaborations with academia, industry, and policymakers. The question is that how can design-led innovation, along with entrepreneurship, pave the way for design thinking and critical design thinking in particular, so that we remain focused on human-centered innovation. We also look at solutions which are ethical, especially in the age of artificial intelligence. We will look at, and this conference will address issues based on inclusivity, resilience, trust, and sustainability. All this will take part in the conference. We also look at the key role of the PFRDA in terms of ensuring that in old age for senior citizens, financial independence, reduce poverty, and enhance social well-being in emerging economies, especially like an economy like India. We are proud at SMI to host this conference because of our diversity. We have MOUs for biomaterials, biology, ecology, skill development. We participate in metro stations. We are key stakeholders in developing public policy. We are one of the key leaders in promoting practice-based research, memory studies. We are closely associated with science and technology, product and process development and education. And we are partners with a diverse range of institutions such as the World Design Organization, the ISB, NABARD, the governments of Delhi and Karnataka, Biocon, Science Gallery, FFSC, the Systems Bio Institute in Tokyo, BMRCL, just to name a few. And if you look at the diversity of the conference, it is reflected in the topics, which include topics on financial literacy, investment readiness for startups, green fintech, even street vendors we are looking at. We are looking at financial volatility in this world of VUCA, of volatility, uncertainty, complexity and ambiguity. We are also looking at forecasting, very importantly looking at ethics as design, a collective ecosystem. Very importantly, we are looking at digital payments for handicrafts, which has often been a talked about but much neglected sector. We are looking at socio-technical design, design-led framework for ESG, and community resilience. And we believe we are a community of practitioners, so all the more reason for us to be associated with a discussion or a forum that talks about community resilience. And with this, I wish the conference all the success it deserves. And over back to you, Priya. Thank you.
Thank you, Dr. Das, for setting the stage really for what SMI is and what we're doing at the conference. I know that Mr. Akshay Bapte is here with us, so a round of applause for him. Now I would really like to invite our additional registrar and director administration, our very own Professor Raghavendra Prabhu, to deliver the presidential address.
I think before that, we'll hand over a bouquet to our distinguished speaker. Good morning, everyone. So, distinguished chief guest, the esteemed dignitaries on and off the dais, the faculty members, staff, students, and the delegates from outside. It is my pleasure to be here during the inaugural function of the International Conference on Design-led Innovation to foster FinTech ecosystem in emerging economies, and it is conducted for the next 2 days, today and tomorrow. So, on behalf of the campus administration, I congratulate the Institution Innovation Council (IIC) and the Department of Design-led Innovation at Srishti Manipal Institute of Art, Design, Technology for conceptualizing and organizing this timely and highly relevant international conference. I also extend our sincere gratitude to all our sponsors for partnering with us in this important initiative and for its continued commitment to fostering innovation, entrepreneurship, and financial inclusion. The theme of this conference reflects one of the defining conversations of our time. Across the world, financial technology is transforming the way people save, invest, borrow, transact, and build businesses. In emerging economies such as India, FinTech has become a powerful enabler of inclusive growth, bringing financial services closer to millions through digital innovation. However, technology alone is not sufficient. The true measure of innovation lies in how effectively it addresses human needs. This is where design-led innovation assumes great significance. By placing people at the center of innovation, design thinking enables us to develop financial solutions that are intuitive, accessible, inclusive, secure, and responsible to diverse user needs. It bridges the gap between technological capability and real world impact. India has emerged as one of the world's most vibrant fintech ecosystems, supported by visionary public policy, rapid digital adoption, a thriving startup ecosystem, and robust digital public infrastructure. Platforms such as UPI, Aadhaar, account aggregator, and digital public infrastructure have demonstrated how innovation can transform financial access at an unprecedented scale. Yet, as we move towards a more digital economy, there remains an equally important responsibility to ensure that innovation reaches every section of society with trust, transparency, and accessibility. The interdisciplinary nature of this conference is particularly noteworthy. It brings together experts from design, finance, technology, public policy, banking, academia, and industry. Such collaborations are essential because the complex challenges of today's world cannot be solved within disciplinary boundaries. They require diverse perspectives, collaborative thinking, and shared commitment. At MAHE, we firmly believe that innovation flourishes when creativity meets technology, when research meets industry, and when education responds to societal needs. Institutions like SMI exemplify this philosophy by encouraging students and researchers to approach problems through empathy, creativity, experimentation, and collaboration. I hope that over the next 2 days, this conference will serve as a vibrant platform for exchanging ideas, presenting impactful research, sharing successful industry practices, and building partnerships that extend well beyond these sessions. I encourage our students and young researchers to actively engage with the distinguished experts and young researchers presently here. Conferences such as these provide invaluable opportunities to learn, network, and gain insights into emerging trends that will shape the future of finance and innovation. As we inaugurate this conference today, let us reaffirm our shared commitment to creating technologies that are not only innovative but also inclusive, ethical, sustainable, and human-centered. Let us work together to build financial ecosystems that empower individuals, strengthen communities, and contribute to the economic development of emerging economies. I wish the conference every success and hope that the deliberations over the next 2 days generate new ideas, meaningful collaborations, and actionable outcomes that contribute to both academic knowledge and industry practice. Thank you all for your presence and participation. Thank you so much.
Thank you, sir, for that reaffirmation of how MAHE is really invested in innovation. And I must tell you, he's a good sportsman also. He runs faster than the UPI maybe. So thank you very much. Now we're going to go to really our next speaker, who is also to deliver the keynote here. Professor M.H. Bala Subramania is a professor of economics at the Department of Management Studies, Indian Institute of Science, Bangalore. He has been serving in IISc since May 1996. He has more than 200 publications to his credit, comprising research papers in referred international and national journals, among others. His field of specialization is in industrial economics. 2 of his research works have been published as monographs by De Gruyter, Berlin, Germany in 2021, namely Entrepreneurial Ecosystems for Tech Startups in India, Evolution, Structure and Role, and the other, Technology Business Incubators India, Structure, Role and Performance. Another research work titled Returnee Entrepreneurs and Tech Startups in India will be published as a monograph in April 2026. Professor Bala is widely recognized for his extensive research in innovation, entrepreneurship, MSMEs, and technology management. His scholarship has both been significantly influencing both for academia and policy. So please welcome Professor for the keynote. Also, I just needed to announce that Dr. Prabhu has some engagement which he has to leave for, but thank you very much for being here.
Yeah, sure.
Yeah.
Good morning to all of you. I'm truly honored to be the national speaker here for this international conference. Primarily because for any Karnataka resident in general, coastal Karnataka resident in particular, Manipal is a matter of pride. And I hail from the edge of the coastal Karnataka belt, because Manipal has made pioneering contribution in the field of banking, as we all know, and it continues to make significant contributions in the field of education and healthcare. That is precisely why I consider it my privilege to be here as the national speaker for the international conference on design, innovation, and FinTech startups. Now, I would like to start with the proposition that FinTech startups have a very valuable role to play in the economic transformation of our country in its true sense and achieving the goal of Viksit Bharat by 2047. Now, having said that, let me make reference to the entrepreneurial ecosystems and tech startups in general, and FinTech startup ecosystems and FinTechs in particular. Now, all of us are familiar that both entrepreneurial ecosystems for tech startups and tech startups, as much as FinTech startup ecosystems and FinTech startups, they are emerging in a big way. So much so that Bengaluru, India is considered the third largest startup ecosystem for tech startups and for the FinTechs as well. Now, given that, the question that I would like to raise here is, what kind of impact these FinTech startups have made on the marginalized sections of Indian community? I'm sure both your director and the register, they made reference to the kind of impact that FinTechs would make on Indian economy by and large. So it is in that context that my question, I have two important questions to pose. What kind of an impact FinTech startup ecosystem and FinTechs have made on the marginalized sections of Indian economy? And what are the implications of ever-growing FinTech startup ecosystems and FinTechs for achieving the goal of Viksit Bharat by 2047? Before trying to answer those questions, I would like to bring to our kind attention that we have an immense potential to emerge as the leading startup nation globally, now including FinTechs. Now, that is because of these reasons. I do not want to make reference to the very widely referred demographic dividend concept, but certainly our demographic features are pretty favorable for creating a very favorable ecosystem for a steady generation of startups and FinTechs. Because young population, more than 50% less than 25 years, and almost 2/3 less than 35 years. That's the first point. But having mere population is of no use. We need to have the purchasing power. That is why it leads to the second point. There's a steady increase in the per capita income. Even if you look at US dollars in constant terms, the growth in per capita income in the country is pretty significant. But then one would put forward the argument
that per capita income hides more than what it reveals. Now that is where we should look at the distribution of income. Now according to the official calculation of Gini coefficient, Gini coefficient varies between 0 and 1. If it is 0, it means perfect distribution of income, and 1 means it is complete concentration of income in an individual hand. Now official estimates show very clearly that between 2012 and 2022, the Gini coefficient has actually reduced from 0.28 to 0.25. But in some other reports I found that these estimates have been arrived based on consumption expenditure data. It excluded wealth. Now if you include income and wealth, the Gini coefficient works out to be about 0.62. That implies that there is a skewed concentration of income and wealth in the country. Now let us look at some other points also which certainly favor my proposition that yes, we have all the capabilities to emerge as a leading startup nation globally. We have higher education institutions, more than 1,000 universities, more than 44,000 colleges, and particularly we have science and engineering institutions with an increasing focus on research and entrepreneurship. Engineering college more than 2,500, and they generate more than 1.5 million graduates because they are the source of entrepreneurship for startups, including fintechs. And an increasing number of MNCs through foreign direct investment, that is another encouraging factor. And India is considered the GCC capital of the world. Increasing number of unicorns, I believe 133 as of May 2026, of which more than 2/3 emerged in the last 6 years. And policy support is increasing rapidly, both at the national and regional levels. And there is an ever increasing return in entrepreneurs because they are the source of innovative startups, that is in general considered so. So due to these factors, there is every possibility that India can emerge as the leading startup nation globally. Now these are some of the statistics collected from multiple sources. You may see here that number of fintech startups account for hardly 6% of the total number of tech startups. But when we look at the unicorns, they account for almost nearly 25% of the total unicorns in the country. Now that has its own impact and implications. Let me come to that a bit later if necessary. Now let me also look at the flip side. Now there's a high rate of, the rate of survival and exit of Indian startups is not known. Globally, they say that more than 90% of them do not survive beyond 5 years after emergence. However, no official estimate has been made in the Indian context. Now another factor that we need to understand that our entrepreneurial ecosystems are still evolving. See, there are 4 phases that have been identified in the process of evolution of startup ecosystems: nascent, evolving, matured, and self-sustainable. But all our ecosystems, including our own Bengaluru, it is still undergoing evolution. It has not yet reached a stage of adequate maturity. Now, patent-based startups are hardly a few, because patent-based startups, they indicate the kind of, the strength of, or the quality of innovation. Now, entrepreneurial universities are not yet encouraged explicitly and promoted in a big way. If you look at the entrepreneurial universities, at least implicitly, they are only confined to maybe the premier IITs, the premier IIMs, and of course IISc, not beyond that. So we are not actually encouraging entrepreneurial universities in a big way. That's very important. Let me explain what we mean by entrepreneurial universities. See, all higher education institutions, they are certainly engaged in teaching, and a good number of them are engaged in research as well. But an entrepreneurial university, it will engage in teaching plus research and innovation commercialization based entrepreneurship generation. So that kind of a university we had to promote in a big way. And matured entrepreneurial ecosystems and entrepreneurial universities they're absolutely essential for achieving high quality startups with a high life expectancy rate, because they are the true game changers. Now this is how an entrepreneurial ecosystem is actually defined. We did a study for Department of Science and Technology, Government of India, and it is based on that we have defined it so. Let me not spend adequate time, much time on this. Now let me focus on FinTech revolution in India. All of us are very familiar, so I'm not going to describe what is FinTech revolution, what is the FinTech ecosystem, I'm not going to deal with it because it is widely known and it has attracted global attention. Worldwide researchers are looking towards India to understand how is that we have achieved such a rapid success rate despite the literacy rate being not that comparable to the developed world. Infrastructural inadequacies are there, poverty still exists, at least in certain pockets of the country. But then we have seen that the key characteristics of our fintech revolution is India now boasts tens of billions of digital payment users. And smartphone penetration you can see in the nooks and corners of the country. About 87% of the Indians now use, I believe, to use fintech services, well above the global average. Now, fintech supported by appropriate digital infrastructure enabled cashless payments, instant personal loans, and investment in markets from on smartphones. Now, that is for me secondary. Now, if fintechs have to make a significant impact on the marginalized sections of Indian economy, now that must be seen in terms of these three factors. The first one is credit flow to micro and small enterprises. Please note, I have avoided MSMEs. I have only used micro and small enterprises. Second one is formalization of Indian economy. And third one is financial inclusion. If we achieve even a moderate rate of success with respect to these three factors, we can say we are moving pretty confidently towards achieving the goal of Viksit Bharat. Now, credit flow to micro and small enterprises, I believe it has undergone a dramatic change. Now, that is characterized by, rather, supported by these factors. One is flow-based lending. Now, fintechs assess creditworthiness by analyzing digital footprints like GST filings, digital payment histories, and accounting software data. And if faster turnaround times, that's also very helpful for micro and small enterprises. Now, they use AI-based automated decision making, allowing businesses to access working capital and vendor financing within a matter of couple of days. And ecosystem integration that also provides lenders secure real-time access to business data, minimizing risk and drastically reducing non-performing assets. And the last one, government backing, of course, the most important one. Unless central digital infrastructure has spread widely, perhaps all these achievements wouldn't have happened. Policies and initiatives like the doubling of credit guarantee fund trust for micro and small enterprises coverage have given fintechs and partner non-banking financial companies the risk mitigation needed to lend more confidently. Now, having said that, let me look at how the credit flow has actually changed, at least in the last 5 years, towards MSEs. Now, this is RBI data. Now, you look at MSEs, if you look at the credit flow between 2021 and 24-25, it has almost doubled, right? Now, if you look at share of micro and small enterprises in the industry credit flow, it has increased by almost 10 percentage points from about 19.66 to 29.35. And if you look at the share of MSEs in non-food credit overall, that also has increased from about 5.3 to 6.48. That's almost more than a percentage point. And if you look at the annual growth of MSE credit, it has been in double digits, much more significant 21-22, and thereafter it has more or less maintained its tempo. Now, this is the first part. But did it help us? Did it help us to bridge the credit gap that micro and small enterprises are experiencing? Certainly not. See, credit gap in the micro and small enterprises sector is a worldwide phenomenon. And in India, it is much more intensive. In the sense, almost 80% of the credit needs are not met by the institutional credit in our country. That's what they say. To what extent this has got reduced, I'm not able to get any data or any source of information. Now, looking at the formalization of Indian economy, this is very, very important. Please note, we are primarily an unorganized economy, in terms of employment. Now, organized sector accounted for hardly 8% of the labor force in 1991. This is according to the economic survey data released by the government of India. Now, did it change? Of course, it changed for worse. By 2011-12, it accounted for 6.24% of the labor force. Again, economic survey data. Now, from 2012-13 onwards, economic survey has stopped releasing this data on organized sector employment. Now, but formalization, why it's important? Because it brings workers under the umbrella of government regulations and benefits so that such unorganized workers, they are not left vulnerable to economic ups and downs. Now, a registration with the Employees Provident Fund Organization, that indicates an entry into the formal sector. Now, what are the benefits? It ensures financial security, insurance coverage is provided, monthly pension eligibility is there, it offers flexibility with medical and emergency withdrawals. Now, government has been making conscious efforts to bring more and more unorganized working class under the organized fold, under the formal fold. So that is why you can see the net additions to EPFO. It is from the Press Information Bureau, 61.12, 78.58, 122.34, 138.51. These are the statistics. But then there are observations that just like there are digital inclusions, there are digital desertions as well. So to what extent this will actually be the trend in the future, very difficult to tell. That's why if you look at I looked at an independent study. Please note the formalization of employment over time. If you see the unorganized sector employment accounted for almost 95% of the total labor force. Now that has steadily declined but marginally. Now between 2020 and 24, yes, the major achievement is it has come down to 90%, whereas organized sector employment has reached 10%. Now, is this sufficient? Certainly not. Because if you look at developed countries, organized sector would account for almost 90 to 95% of the total employment in a country like Japan. Unorganized sector still persists there for various reasons. Now, let's look at the financial inclusion. Now, it is defined as the availability of affordable financial products and services to meet the needs of individuals and businesses in a very responsible and sustainable way. Now, the advantage in financial inclusion is it nurtures entrepreneurship at the bottom of the pyramid, predominantly. Now, it encourages business growth at that level. It empowers women, and it supports, it facilitates or strengthens an individual in managing risks. So, financial inclusion itself can boost formalization of Indian economy and better credit flow to MSCs. And you would know that RBI has launched a financial inclusion index in 2021 with the aim of capturing the financial inclusion level across the country, representing different segments such as banking, investment, insurance, postal and pension, among others. How did it change? If you see financial inclusion index, it has increased by almost 24%, more than 24% between 2021 and 2025. It was 53.9, steadily increased, and the latest index shows that it stood at 67 last year. It might reach 70 this year. But overall, if you see, while these three factors or these three issues have been handled in a positive sense, we still have to go a long way. Now, so their contributions, they are heartening certainly, but these contributions play a vital role, but we have a long way to go because huge credit gap still persists. If we really promote fintechs in a big way, continue to promote fintechs in a big way, particularly in rural India, semi-urban and rural India, that would largely benefit credit flow on the one hand, formalization on the other, and financial inclusion the third one. So formalization is limited to a minority of the economy, and financial inclusion requires further increase. So government has itself mentioned in its document that more investments have to be made on physical and digital infrastructure that would give a boost to manufacturing on the one hand and give a boost to fintechs on the other, and in turn they'll be able to answer the three issues that have been raised here. Thank you. Sure.
Thank you, Professor Balasubramanian. Thank you for your rich academic insights and really offering this broader perspective. Next, we have someone from the industry and who's been working 22 years and more, if I'm right, with the Canara Bank. We have Mr. Shibu Sebastian, Assistant General Manager, Canara Bank. It would be great to hear a few words as we link industry and academia.
Respected dignitaries, good morning to all. I'm Shibu Sebastian, Assistant General Manager, Canara Bank, working in Canara Bank Regional Office, Bengaluru North. All of you know that this banking sector in India has undergone a significant transformation in the recent years, mainly due to the adoption of technology.
The mic is there for some reason.
So as India moves towards becoming a global economic powerhouse, so banking system also must evolve to accommodate the growing digitalization of the economy. So I will stick on my topic to the digital finance. The digital finance is it is the financial service delivered over digital infrastructure, including mobile and internet, with a low use of cash and traditional banking branches. Using this particular mode of transaction entails less use of cash and utility of traditional bank branches. Computers and mobile phones and cards used over POS devices that connects individuals and businesses to a digitalized national payment structure. So the major types of digital financial services are: one is digital payments. So the central aspect of India's digital banking evolution is the advent of mobile payments and digital transactions. The introduction of Unified Payment Interface (UPI) in 2016 has been the pivotal moment in the digitalization of the Indian banking sector. When the UPI was introduced in 2016, as a person in banking industry, we never thought that our digital payments are going to revolutionize like this. Now we don't carry any cash, we don't go to ATM, we don't go to the cash counters for drawing cash. Now we can do all the payments through UPI. In the every nook and corner of the India is we can make the payments through UPI transactions. Developed by the NPCI, the National Payment Corporation of India, UPI enables real-time peer-to-peer and business-to-consumer transactions, significantly enhancing the ease of making payments. Since its launch, UPI has experienced remarkable growth, reflecting the deepening reliance on the digital payment systems across India. This increase in transaction volume highlights how digital platforms have improved access to banking services and financial products across the country, making banking services more inclusive and accessible. Furthermore, India's large-scale government initiatives such as Pradhan Mantri Jan Dhan Yojana (PMJDY) and Digital India have accelerated the country's transition towards a cashless economy. PMJDY launched in 2014 aimed to provide financial services to the unbanked population by promoting the use of digital banking accounts. As a result, the number of individuals with which access to bank accounts has increased dramatically, and more people are using mobile phones to manage their finances. And also the systems like mobile wallets and FASTag let transfer of money instantly using just mobile phone number and QR code. And also the rise of super apps, all-in-one solutions for a digital economy. The super apps are rapidly transforming India's digital ecosystem, offering users an integrated experience where multiple services are accessible through a single platform. For example, Canara Bank is having a Canara AI1 app, mobile banking app, where you can have more than 300 features are there that will cater to the needs of the customer. And the second is digital lending. The entire loan application process has been transformed into a convenient and seamless experience. With just few clicks, borrowers can provide the necessary information, and if approved, the funds are swiftly transferred to their bank accounts. So in Canara Bank, about the digital lending, Canara Bank also we have digitalized lending under personal loans, then loan against deposit, mutual fund, etc. We have started automation of in digital lending. Another aspect is wealth management. India's wealth management landscape has undergone a significant transformation with a platform like Sarada Grow make investment accessible by offering personalized data-driven portfolio management that appeals to first-time investors and seasoned users alike. Such platforms eliminate traditional biases with data-driven decisions, enabling millions to invest efficiently through automation, advancing financial inclusion in India. And next is insurance tech. Insurance technology platforms have revolutionized how Indians purchase, compare and claim insurance policies. By harnessing AI and machine learning, InsurTech is delivering personalized plans and reducing claim processing times. And the digital banking provide everything from current and savings account and lending tools without the need of traditional brick and mortar branches. Another is microfinancial services. These services are built to help people in rural areas through Aadhaar-enabled payment systems. The AEPS does not require physical activity like visiting a branch, using debit or credit card or signing a document. This bank-led model allows digital payments at point of sale via business correspondence using Aadhaar authentication. The advantages of digital financial services are more affordable, secure, convenient, and catalyst for the provision and use of a diverse set of other financial services. About the future outlook, the Indian consumers, particularly the younger digitally native population, now expect seamless personalized banking experience that are accessible via smartphones. A majority of Indian consumers under and below the age of 30 prefer to manage their financial activities through mobile apps and online platforms, leading banks to develop more user-friendly interfaces and digital-first services. These expectations have forced traditional banks to accelerate their digital transformation strategies and invest in technology to meet the demands of an increasingly digital-savvy customer base. The future technologies that artificial intelligence, the role of AI in banking has received considerable attention in recent years. AI-powered chatbots, virtual assistants, and predictive analytics are being used to enhance customer service and improve decision-making in areas such as credit scoring and fraud detection. AI has the potential to revolutionize the banking by automating routine tasks, offering personalized financial products, and improving the accuracy of financial forecasting. Other technology, blockchain technology. Blockchain technology has also been identified as a potential game changer for the Indian banking sector. Blockchain's decentralized and transparent nature offers several advantages for banking, including enhanced security, improved efficiency in cross-border payments. Another area of importance is API banking, that is application programming interface. Application programming interface enables a third-party application to use a particular interface through which it can access common set of tools or services. In banking, this means a bank can offer third-party access to its customer services through dedicated APIs. So in large organizations, they can use the payments, routine payments like salary payments or vendor payments through API banking. They need not go for an internet banking, but through API bankings, using their institutions or organizations, corporate software, they can make all the payments at their office itself. So I would like to introduce some of the digital products. Mainly I am sticking on to the Canara Bank digital products. That is mainly online banking products, internet banking, mobile banking, and UPI. We have a separate UPI application, Canara AI1 Pay, just like Google Pay or Phone Pay. Canara Bank also developed a UPI application, Canara AI1 Pay. And the card products, credit card, debit card, FASTag, and prepaid cards, and international travel prepaid cards. International travel prepaid cards are designed for customers travel globally. The traveler can use a forex card just like a debit or credit card for his expenses in local currency abroad. Now the international travel prepaid cards are available in 3 currencies, USD, Euro, and Australian dollar. And coming to merchant products, Beam QR and Easy Pay with the Canara Beam QR Soundbox. Facilitate, that is QR code facilitate to receipt of payments by scanning the QR code. In the Bharat Bill Payment Systems, BBPS, driven by National Payment Corporation of India, it offers a single window equipped with a host of pillar categories, namely electricity, FASTag, broadband, etc. Other merchant product is Payment Gateway. Payment Gateway facility is provided to the customers, institutions, corporates, government bodies to collect payments or fees from their customers digitally through channels such as internet banking, debit card, credit card, international card, UPI. Canara Easy Fees enables education institutions to collect fees online from the students. So API banking, through API banking, clients can perform financial, non-financial transactions from client locations or client software. API banking helps corporates, clients to perform the entire end-to-end monthly salary payments, regular vendor payments from their software without visiting the branches. A central bank digital currency. Central bank digital currency, the digital rupee launched by RBI is India's legal digital currency. Canara Bank joined the Central Bank Digital Currency Initiative by launching Canara Digital Rupee app. So other product is digital devices like ATMs, cash depositing machines, and passbook updating machines. Thank you.
Thank you, Mr. Shibu Sebastian, for bringing really the digital finance landscape here. I now invite Mr. Akshay Bapte, Program Manager of Campus Founders, NSR CEL IIM Bangalore. Mr. Akshay is passionate about building innovative ecosystems and enabling meaningful collaborations between startups, corporations, and entrepreneurs. At NSR CEL, he has designed and scaled incubation programs, supported 90 plus startups, evaluated 1,500 plus venture applications, and built partnerships across climate tech, mobility, entrepreneurship, and more. He has also led corporate innovation engagements with organizations such as Volkswagen, Schaeffler, HDFC Live, GPS, working on startup scouting, use case discovery, innovation showcases, and startup enterprise collaboration. So welcome.
Thank you so much. Hi, good morning everyone. Thank you so much to SMI Institute for inviting NSRCell, and I'm happy to represent NSRCell here. And we are very excited to partner for this FinTech conference here. In the next 10 minutes, I'm going to talk about how NSRCell, IIM Bangalore support startup ecosystem, what kind of startups that we incubate. I'll talk about the program that I oversee, which is called the Campus Founders Program, through which we support student entrepreneurs, and also talk about how we support fintech startups as well. So, those who are not aware, NSRCell stands for NS Raghavan Center for Entrepreneurial Learning. It's a incubation center of IIM Bangalore. It's been running since more than 2 decades. Last year, we celebrated 25 years of NSRCell as well. Our mission is to basically catalyze entrepreneurial ecosystem and how we can bring both all entrepreneurs, academia, and industry together, and side by side how we can foster fundamental research in entrepreneurship as well. This has been the impact of NSRCell so far. As I said that we have been running this program for the last 25 years. We have engaged around more than 230,000 entrepreneurs. We have impacted around more than 7,000 startups in the very early stages as well. Our startups have created more than 35,000 jobs, and the overall valuation of our startups that has been incubated at NSRCell stands around $7 billion. And how do we do that? So NSRCell engages startups through multiple programs. Startups become part of NSRCell depending on what stage that they're operating in or what sector that they operate in. So any startups, anyone who is in idea stage or prototype stage, we have 3 programs for them. Launchpad, if you're a student, we have a program called Campus Founders, which I oversee. We have a healthcare specific program as well. If you are in a growth stage, there's a program called Velocity, which supports startups in post-revenue stages. If you are in impact space and building in an impact space, we have a program called Impact Orbit. Even if you are a non-profit, you can become part of that program. One of our largest vertical at NSRCell is Women Entrepreneurship Vertical. We have 2 programs there. One is Women Startup Program for early stage ventures, and a Goldman Sachs 10,000 Women Program, which is supported by Goldman Sachs for women startups in scale-up stages. And we have 2 Center of Excellence at NSRCell. One is Climate Center of Excellence, which supports startups in areas such as mobility, sustainable mobility, climate incubation, and circular economy. And most importantly here for this conference, we have a COE for FinTech as well, where we support startups who are in the stage of Series A funding, which is supported by Karnataka government as well. You are going to meet few of our startups here in the panel as well. I can see some faces here as well who are part of our program. So this is how we support our startups through different programs. This is what we offer apart from different things that we offer. We offer them a startup toolkit as well, which are different tools which are available to some of our startups who become part of our programs. I'll quickly take a few minutes to talk about the program that I oversee, which is Campus Founders Program. As Professor was also talking about how we are seeing growing population of growing young population, increase in the number of institutions as well, and that's why we created a program which is specifically catered towards student-led startups. What do we do that? So with an incubation program, anyone who is in a can be an undergrad student, a postgrad student, or even a PhD student can become part of the program. If they have a working prototype, not just an idea on paper, if they can show that they have built something, anyone across India, and if they have a X factor. What do we mean by X factor? That if they have an innovative idea with a scale potential. So if you are developing something in a very niche space, tell us why it matters and why it matters now. And if you are in a crowded market, we want our startup to show us that how will they break through in the market. I'll skip this, but I'll tell you more about how we are supporting founders in practice. So these founders come to us with a very raw ideas, like innovative ideas, but very raw ideas, because sometimes students think from a very solution perspective that I have an AI skill probably and I can develop an AI solution. but there needs to be multiple things that needs to be done there. So that is supported by our online modules, which is basically on the knowledge and workshop side of it. But what we really focus on is how they can go in the ground and talk to the customers. Because the real solutions are built based on what users want, not what you can build. So we give them, we force them to go to the ground. We give them something like interview templates, how you can interview your users and clients, and based on their insights, then you can develop your solutions going forward. Just to talk about how when a solution or when an innovation comes to NSRCell, how they improve. I'll take just one example of a startup called Trainfly. They are a Hyderabad-based startup in the social impact space. When they came to NSRCell, their problem statement was that they want to solve for manual scavenging. The problem that they understood was that manual scavenging is right now still done by humans, and the main problem is the vertical waste removal. That's what the problem statement that they came up with. Their idea was, we are engineers, we can build a hardware which can solve for the vertical removal, and that's how the humans, the workers, don't have to go to the drain and don't have to do the dirty work. When they came into the program and we forced them to talk to the users, and they went to the ground and talked to the manual scavengers themselves, they realized that, and the scavengers themselves told that the vertical drain is not problem. We can just put a balti and remove clean the drain itself. The problem for us is the horizontal clogs, which they didn't realize earlier because they haven't spoken to the customers earlier. So through the program that they realized that the major problem is not the vertical removal but the horizontal drain. It does not require a complex machine, but the scavengers require the simple assistive tool that can help them. They don't need a very complex machine to do this. So through that, they realized that the innovation should not be machine focused but also worker centric design. So that's how we help, in a way, NSRCell help making innovation very user centric and customer centric. This is what we do, and these are two examples from recently from our Campus Founders program. I'll also take time to talk about a little bit about what's happening in the entrepreneurship ecosystem as well. When we see, whenever I talk about student entrepreneurs, people still think that they must be very naive. They must not be must be a breakthrough innovation must not be coming from them. That's why I'll take some of the example here to talk about what students in India in general are building, and probably you would be able to be familiar with some of the names as well. So students, particularly students, are focusing on deep tech, health and fintech. As we know that India has a lot of engineers, a lot of tech institutes which are developing. And there are a lot of innovations in the space sector as well. The two names that I have taken here, Digantra, Ethereal X, both are in the space tech ecosystem. Founders are 23, 25 years old, and they are developing a space innovation here. Not only in space, but we see innovation in health space, such as Emote, which is developing in the mental health space, and fintech solutions like Plutus, also which are developed by student-led founders. What we are also seeing is we are going beyond IIT IIM now. So the earlier convention was that all the founders come from IIT and they build a SaaS platform. Is changing now. We see a lot of founders. We also see a lot of application founders from tier 2 and tier 3 space. And the diversity is also increasing. So we are seeing more and more female founders as well. So 30% of the female 30% of the founders are female. We see 40% of our ventures coming from the non-tech background as well, which are design, biology, and policy. And 30% are also hardware first. As I told you that we are moving away from the SaaS and also developing hardware-led solution as well. So this is what we are building, and we are also excited. And I think you guys also should be very excited about what we are developing and what our students are developing in general. I'll also take some time to talk about what we and how we help fintech startups at NSRCell as well. As I mentioned that we have a FinTech Center of Excellence which we run with the support of Karnataka government. And through that we support scale startups who are in the Series A funding stages. We run a cohort with them where similar programs happen, where a lot of interventions are there through workshops and a lot of engagement with the founders and regulators. But we run a lot of clinics as well, which are basically one-on-one diagnostics and expert deep dives into it. So let's say if we have a lot of insurance startups, we invite someone from PFRDA to come and talk to our founders. But also we have created a community, so anyone who's interested in developing in the fintech space and want any kind of support can become part of our community and engage with our founders as well. And this is what we do, and we are trying to create a fintech ecosystem where everyone is together here. So there are startups in the middle, but this should be supported by regulators who regulate the environment. It should be supported by investors who invest in this kind of startups. The major insight should come from the customers, which should be at the center of focus. And what we do this through a lot of programs, community events, one-on-one expert connects, workshops, demo days, fundraising events. We are running this COE since last 1.5 years. As I mentioned that you will meet two of our ventures here as well. Pension Box, which is also partner for this event, is one of the incubatees of our program. So this is what we do. This is how we support fintech startups, not only fintech startups, but other startups at NSR Cell here as well. Anyone here who is interested in joining our community, this is the QR code that you can scan. But yeah, thank you so much for giving me and giving NSR Cell opportunity to talk about what we do at NSR Cell and how we support a startup ecosystem. So thank you so much.
Thank you very much, Mr. Akshay Babu, for laying out really this, ecosystem that you have, and I hope people will benefit from here. And now it is my honor to invite our chief guest, Shri S. Raman, Chairperson of the Pension Fund Regulatory and Development Authority. Shri Raman has been instrumental in shaping India's pension and financial regulatory landscape through visionary leadership and policy initiatives. Shri Raman assumed charge as Chairperson, Pension Fund Regulatory and Development Authority on 20th June 2025, and he has served as an officer of the Indian Audit and Accounts Service from the 1991 batch. Prior to joining PFRDA, he served as the Deputy Controller and Auditor General and Chief Technological Officer in the Office of the Controller and Auditor General of India. He has previously held several leadership positions, including Chairman and Managing Director of Small Industries Development Banks of India, Managing Director of NESL, Information Utility Principal Accountant General of the State of Jharkhand, Chief General Manager, and then as Executive Director of the Securities and Exchange Board of India during the period from 2006 and to 2013. Mr. Raman holds a bachelor's degree in economics, followed by an MBA from the University of Delhi. And amongst his professional and academic qualifications are an MSc in Financial Regulation from the London School of Economics and Political Science, and LLB, Chief Digital Officer certification from the Indian School of Business, the Certified Internal Auditor credentials from the Institute of Internal Auditors, Florida, and a postgraduate diploma in securities law. And I must tell you, this is still a very humble introduction to him. So please join me in welcoming Shri S. Raman for this inaugural address.
So very good morning, I think it still is, to all of you. Great to be here with my friend Nirit Alva, long-time friend for the last 40 years plus. Invited me here, I sort of jumped at the opportunity. And to be very honest, it was heartening to find the sheer sort of title of your conference. The fact that you've put right up front critical design thinking, I think that is probably the way of the future. So, some 10 years ago, I think when Ashoka University started, maybe I've got the timelines a little wrong, but they came out with one course called critical thinking. And we are all old timers, and we sort of said, what is this critical thinking business? It doesn't make sense. And then you realize that through your own work and when you sort of explore new areas, I think it's really about asking the right questions and how sharp you are in your logical, sort of flow of thoughts. And now if one were to sort of look at it from the AI age perspective, I think suddenly everyone's chasing these courses called critical thinking, because the whole concept of prompt design really comes from the ability to think through a problem and then give those prompts in a logical, sequential manner so that there is a interaction and a response from the AI machine. So I'm sure all of you are much more sort of aware and adept at these things than I am, but I'm just saying that it's great that you've got both critical design thinking and of course the social impact. Now I think that is something which I have spent a lot of my life looking at, working on in a very hands-on manner, and there is actually nothing better. In fact, the distinguished speakers before me have actually laid it out much more easily. There are many aspects which Professor Balasubramaniam talked about. The entire MSc, and in fact, when I was at SIDBI, we coined the term nano entities. It's like one step below the micro. That really, what is it that we're talking about? I'm forgetting his name, but the gentleman from NSRCL, again an institute that I sort of briefly worked with during my SIDBI days, and the ability to sort of create an ecosystem of startups, whether it's FinTech or not is really a minor sort of point. But the fact remains that social impact, how does it connect with what the earlier speakers have talked about? My view is India is a country of self-employed, aspirational households. The number we can always argue on, but roughly we're talking 15 to 20 crore households wherein the only thing that they want is better services, a greater understanding of their predicament, and therefore tailoring solutions to what they actually need. They don't want handouts, they don't want dole from the government. Of course, even you and I are happy to have subsidized LPG, of course they will be similar. But the fact remains that they are willing to pay for services, but somehow these services are not being delivered to them. And I think that really is, if we look at the Viksit Bharat concept, if we are to sort of get there as a developed nation, and my understanding of developed nation is really, if you and I, the fortunate few in India, if we live our lives in a particular way and we have these facilities and these sort of services and tools, etc., why is it that every Indian does not have the same? And I think that's really when we will truly be developed, because if everybody is living a lifestyle that you and I are living, I think honestly that is development. I mean, a lot of us, we've traveled abroad, but when we come back to India, we come back thinking, oh, our lives in India are so much better than what it is abroad. That's because we live in that little sort of 1% or 2% bubble which we are fortunate to live in. But I think if we put these terms together, how do we design, how do we create, how do we provide for that 15 to 20 crore households, which I can very briefly, in a very layman manner, describe as a more joint family with about 1 lakh rupees as their monthly combined income. There'll be probably 3 or 4 persons who are above the age of 15 or 16 who are all working. They would be doing a little bit of everything. There'll be some agriculture, there'll be some small business, there'll be somebody who's working in a city and sending money back. This is truly the India that we are living in, the India that we need to put critical thinking and social impact and put it together. And that's really what I think we're all talking about. So, a very long opening remark, but kudos to all of you to have put together this conference, and I'm sure it will throw up very good ideas. FinTech and design, I think it's absolutely critical. I think for the fact that when we deal with anything, I mean, we deal with complex forms, we don't know how to fill them up. In fact, right in the morning, it was lovely to hear Professor Das tell me that he has an NPS account. So my first question to him was, how did you open it? Because when I came into PFRDA and was told that you need to open an NPS account, it was very difficult. With all those years of, financial sort of acumen, understanding, etc. So we have excellent products, we have the right intent, but somehow we have not been able to deliver it. And without somebody else's assistance, it's not possible to open an NPS account. So I sincerely hope that at the end of 2 days, all of you will end up opening NPS accounts, but the fact remains that we have to make things simple, we have to make things easy. And that's really where I feel we are talking about the confluence of what it is to bring in design aspects into a otherwise fairly busy transactional world that we live in. I mean, one of the smallest examples of when UPI came in, I know each one of you might have a similar kind of experience, but I obviously was a cynic, and I said all this UPI business is, we're not sure what happens from a mobile. The same typical sort of doubts of somebody being able to hack into your phone, etc. But when somebody put me on to Google Pay, and I'm sure the others are equally good, but the sheer intuitive nature of that flow was enough to sort of get me onto that. And after that, once you do one thing, it works, you don't really sort of look at any other form of UPI. But I think what the lesson really to be learned is that how can you make something really simple? I mean, keep it simple and stupid is what they say. But I think that's really what we need to look at, especially when we're talking about complicated products in the financial sector. Now, unfortunately, none of us are, sort of, siloed within us. We all need a variety of financial instruments. But unfortunately, the regulatory setup in India is such that each one does its own little bit, and we don't talk to each other. So that's another, something that needs to be looked at. Of course, we have these high-level forums like the FSDC where the regulators come together and talk. But the fact remains that still designing for all the needs of an individual, and these are the less privileged individuals we're talking about, this is really what we need to do. I mean, one of the earliest lessons, I think, was the whole M-Pesa concept which came about in Kenya, where Safaricom, sort of local incorporation of Vodafone, it brought in the concept of how we can deal with financial transactions using airtime. So they converted the concept of airtime into money. Now, it was probably one of the most brilliant thoughts of that early era of the early 2000s, where there was no concept of transacting money in the way we do UPI today. But because I can pay airtime to Professor Das, and therefore he is receiving those many units of airtime, it's currency. So this is the kind of thinking which actually, leads to many more intelligent, important, and sort of user-friendly methods. And that's, I think, really the point. So what have we got in India? And I think we are extremely fortunate to have had that opportunity of a good idea getting plugged in with roots in the right places, and it has led to what is called as the identity layer. And that identity layer, if I go back again about 10 to 11 years, the whole concept of the account aggregator came about because there was a concept of an identity layer. So because I can identify myself easily in a digital system, I can therefore have the power to decide what to do with my personal identities, my education certificates, my medical records, my caste certificate, my whatever is needed. This is apart from the fact that I'll be able to collect financial data about myself from the various places that it is originally stored. And that's the whole concept of the account aggregator, which has now come about. It's been a tortuous journey because, as they say, the best ideas will sort of, get halted and slowed down by vested interests, and that's really part of the ecosystem. I mean, there will be vested interests because businesses have put in money, they want returns on their existing investments, and therefore they're unwilling to really move quickly into the newer technologies. But that's really how I think as regulators we need to be able to chart that course whereby we try and sort of blend the interest of somebody who's currently there with the larger interests of the public, and look at how we can go forward. But that identity layer led to the payments layer, and today we are talking about a variety of information, the DigiLocker being an excellent example of how information regarding myself is stored completely in a safe, sound manner. It happens to be a government-owned concept of DigiLocker, but frankly it is, and I've seen it from inside, it is run more or less as a blind pool of data. So I think that worry that many of us have got, that is the government sort of prying into our own data points, and is there a continuous surveillance? Now these are very important points to also talk about as we move ahead in the digital journey. But the fact is that we do have something called a DigiLocker, which for all practical purposes is safe with us. Of course, there is an override available in the Information Technology Act, which allows the government to sort of access data at particular points with the right due procedure. But just the fact that we've simplified life for so many people in the country, I think is a great step forward. We have got the DPI, as we talk about it. We've got DPI now extending hopefully towards medical records. There's a lot of very, very good work happening in that space. And because of which, because of the data and the management of data, there comes a point when ideas get thrown up. And I'll just tell you this one particular idea which came from the market entirely because of the fact that a particular entity which is called as a third party administrator, the TPA, which lies within the medical insurance space. I'm sure many of you would have, I hope you did not have a chance to interact and didn't get hospitalized, but the fact is that the moment you're in hospital, the first thing you are told is that who is your TPA. Now that person becomes very critical in your life because they process the insurance bills. But the story really is about how individuals in the country are typically not insured. Even those working in corporates or universities like yourselves, once you're out of that corporate or that particular establishment, you're landed on the ground with a bit of a thud because you realize that you don't have something called medical insurance. Nobody told you that you should have had medical insurance for all these years, and then at 55 or 60, whenever you leave that institution, the insurance companies do not look at you the same way as they would have when you were 25 years old. So you are not properly informed and you have landed in a situation where I think today we're talking about 6 to 7 or maybe it's reached 10% of people in the country have some sort of insurance on the medical side. Of course, there's Ayushman Bharat, which is again a great experiment towards providing universal kind of access to medical care, but it's still to sort of move in a way that people get fully satisfied by it. So what happens typically is that 40 to 50% of all medical bills in our country are paid for by the individuals themselves, even if there is insurance. So the data that was sort of put together by this particular entity called a TPA led us to understand that we need to bundle products. So it goes back to the concept of an interregulatory, coordination, and therefore we threw this into a regulatory sandbox. We did, extensive POCs for about 6 months, sold the product in the market. There were about 5,000 people who actually bought into this product, which is nothing but a bundling of a pension account with a top-up insurance on top of it. And a top-up insurance works on the fact that my pension account, which is called Swasthya, so it's called NPS Swasthya, the accumulated amount in the Swasthya account serves as my copay. So when I get hospitalized inpatient, I pay my amount directly to the hospital from the pension account, and then the top-up insurance, which is already bought for me by the pension fund for the entire family of persons within the NPS Swasthya, the top-up insurance gets triggered and that amount of money then comes into the hospital. And that roughly is a ratio of about 1:7, 1:8. So if I put 50,000 rupees myself as a copay, the top-up insurance is roughly about 3 to 4 lakhs. And that is really a very simple way for us to be able to ensure that most of our problems, and these are really critical illnesses. I mean, you'll be surprised. I mean, many of us think critical illnesses cost 30, 40 lakhs and above, but it's not necessarily true, because there are a vast number of hospitals in the country which treat, ordinary people, and the median number of, or the median value of hospital treatment for critical illnesses is about 5 to 6 lakhs. So, we're talking about large number of people in the country getting the benefit of this bundled product, which basically takes care of a health need. This is really what I'm saying is a potential area for all of you to look at. It's a product that will get launched very soon, in about the next, 30 or 50 days. But how do we bring that to the masses? So people like us are typically obtuse. We don't probably understand how best to deliver something to the last mile. And that's really where I feel the whole concept of how FinTech is bringing its services to the people. Because finally it is somebody in that ecosystem of the digital space which is bringing those products to the final customer, linking through APIs with the main service providers, such that there's a seamless journey. At the end of it, no adoption will happen without something like a seamless journey. If I'm going to jump so many hoops to be able to consume a particular product, it's probably unlikely that I will be able to sustain it. So this is really where I bring in the concept of what is it that design has to bring into the FinTech space. And I think it is, it is limitless. There's every single financial product, if it is delivered in a smooth and seamless manner, will end up becoming used that much better and that much more. And this is really what I believe is that the concept of whether it's a street vendor, somebody spoke about a street vendor in the morning. I mean, one of the best schemes is called PM Swanidhi, which came up during COVID. And as SIDBI, we ran that entire scheme for the country. It gave loans of 10,000 rupees to the rediwalas, to the kirana dukan, to anybody who was present in an urban setting. It did not go to the rural setting. And that 10,000 rupees was covered fully under what is known as the CGTMSE. It was a separate kind of a, a guarantee scheme for the PM Swanidhi. It allowed for lakhs of people to get covered with a very small sum of 10,000 rupees, which was valuable to them, especially during the time of COVID. What we realized at the end of that 1 year period, and they had to, I think, repay in about 1 year or 18 months, 85% of those persons repaid the money. So unlike the sort of cynicism that normally sets in, that people will not pay, it's a government scheme, but we have that enlightenment within our country where people said, if my credit record goes bad, I will not be able to get another loan. And that realization has probably taken 20 years for it to set into our country, but it has now. And the very fact that there is something called a bureau score, and my antecedents get captured in the bureau score, causes people to start behaving in a more responsible manner. So again, we didn't expect people to pay back because it was COVID, people were down and out, but that 85% then got a second tranche in the next round of PM Swanidhi, which led to, I think, a 25,000 rupee loan, which has now gone to a third tranche of 50,000 rupees. So we have formalized a lot of people in the country. This led to the creation of the whole Udyam platform and the Udyam Assist platform. So the Udyam platform is something which, and I'm giving these points to you because I honestly believe it's time we start using these concepts, these databases. We need to get into these databases and make them public. Now, often government sort of stores data and stores it well, but doesn't share. It's more of, a fear of, will people misuse the data? But this is really where I think the learning has to come, that this is the data that's useful for people. Otherwise, you're spending needlessly more money discovering another customer, and customer acquisition costs, as we all know, are pretty high. So, the whole concept really is that technology creates possibilities, but design creates adoption. And I think that's really a very important point I'd like to sort of leave with you all. So I've just tried to put together certain, concepts which, at least at PFRDA, because now we are trying very hard to make our entire system completely digital. The likes of Professor Das struggling to open an NPS account should not, really be the norm. But it is very important that we demystify things. I mean, the very fact that, if I can ask all of you, I mean, if you're given a choice of an asset allocation for your money, saying, okay, now you decide how much money you're going to put in equities, government securities, corporate bonds. How many of you, with all that intelligence and understanding, have that ability to say, okay, now this is what I'm going to do, this is the asset allocation I'm going to prepare for myself? It's a very daunting task because there are n number of possibilities and you always want to get it right and you have no understanding of how to go about it. So we have therefore decided that the NPS onboarding system should have just a single scheme. There is no choice. And I think somewhere, getting a person started, saying that there is no choice, once you're in the system, then take your time, take 30 days, take 60 days, go talk to 5 people, and then decide you need to switch your scheme, because the NPS system is so flexible. It allows you to change schemes without any tax implication and completely efficiently. So it's a click of a button, you can change your scheme from A to B to C. So this is really where I'm saying the important point of understanding the customer, which has been talked about. So inclusion cannot be an afterthought. It cannot be addressed through a separate rural initiative or an annual literacy campaign. It must be embedded in the architecture of every product from the very first line of code. Products must be designed for the first-time user, the elderly citizen, the informal worker, the migrant labor. PFRDA's own guidelines now mandate onboarding modes, both digital and phygital, because I think the phygital part is really the assisted journey. And I think most of our onboarding in especially the non-urban centers, ends up being what is called as the assisted journey. Voice interfaces, multilingual applications, assisted journeys are not merely features on a product roadmap, they are the instruments of inclusion. They are the difference between a system that serves everyone and a system that inadvertently serves the already privileged. Another principle which we have come up with is trust by design, and I'm sure that's something all of you understand. The success of digital finance depends on robust cybersecurity, transparent grievance redressal, strong data privacy frameworks, and responsible artificial intelligence. Users should understand not only what recommendation an algorithm makes, but also why it makes it. Explainability is not a regulatory box to tick, but it's a design obligation. Interoperability by design, and I think that's something which we have seen where, especially in the payments world, we've talked and we've seen how interoperability sort of works. Just that one concept of an NPCI switch between all the banks has led to a huge interoperable situation where anybody can reach anybody else's bank account. The personalization by design. Now, this is really where it gets, I think, more exciting. I think a lot of time, if you do spend on this aspect, I'll be really happy to see that. Artificial intelligence offers extraordinary opportunities to make financial services more relevant, more accessible, and more useful. A farmer, gig worker, young professional, or a retiree have profoundly different financial needs, risk appetites, and planning horizons. AI can help deliver tailored financial guidance, personalized saving plans, real-time risk assessments, and retirement projections at a scale that was never before possible and at a cost that was never achievable. However, personalization must always remain responsible. It must be unbiased. It must be aligned with the interests of the user and not the interests of the platform. The power of AI in financial services is proportional to the trust citizens place in it. And that trust must be earned through ethical design. It's really interesting that we have now at PFRDA launched into a particular explainable AI framework. We've launched, we've got one product which is there on our regulatory sandbox. It's about a trusted AI pension advisory utility which can easily tomorrow scale up for insurance advisory, securities market advisory, you name it, whatever. In fact, as Priya sort of right up front said, the Provident Fund instead of the pension fund. Now, I think that really tells us that as PFRDA, we've done very little to introduce ourselves to the rest of the country, because it is one of those structural issues of the country that we've had Provident Fund in this country for 80 or 90 years. It is something that all of us as employees of various establishments have got a deduction in our salary called PF. As late, I think as recent as 2 weeks ago, we've seen a huge change, and this is really where we're talking about customer choice. So we are no longer in that situation where we want to force people into a particular long-term saving route, but we want to make sure that people carry out a long-term saving. But which product, how, where, this is something which people do not understand. The rich have financial planners coming to them. It's extremely useful. If you are in that category, great for you. But most of us are probably not, and therefore, what is going to help us better understand the differences between financial products? What is useful to us? What is not useful to us? One of the things which I see people do is they speak to ChatGPT as if it's like the Bible. So then whatever they say, we just simply accept, and that's scary because it hallucinates, and it hallucinates very badly. So we have a genuine problem of what I have been explained, and I'm somebody who's just learning. It's about deterministic AI versus probabilistic AI. And I think that's a great area to get into. But the way I see it is really from the point of view of a business case where people are getting the benefit of something called auditable, explainable, responsible AI. And what we're really doing in this project is allowing for the wonderful development of technology in the terms of Bhashini and other such, language conversational AIs as they are called. The entire country can speak their own language and speak into some AI machine or AI help. How the front end is going to be, I leave it to you, because that's really where I think design comes in. That's really where adoption comes in. So I can only say that these are the structural points that need to be brought in. So we speak into something that gives us a response. Now, I then ask that why is it this response and not that response? And then the machine explains that yes, your data points are ABC, you're a laborer with so much money, your wife works, you've got parents who work, these are the data points you've given, you live in a, in a pakka house with probably piped water. So all these important points are gathered and each one of them is then parsed through what is known as an information layer or a deterministic layer. It's not guesswork. It's about making all that information go hit some particular rule, regulation, some product, some, say if there are 10 pension funds, now you want to know which pension fund has what return over what period of time, with what asset allocation, all that information is instantly available. And this is really where the power of AI comes in, where you are able to put all that information together and bring out an output which mirrors the requirement in the input. So if my input is what insurance plan should I take or what pension scheme should I opt for, it will tell you that listen, for your status, these are possibly the one or two products that you may like to go into. Now all this is actually possible for virtually for free. So I mean, I think nothing should be given for free because it's always good to charge something. People value it more. But the fact is that we need to be able to create this kind of a ecosystem where the entire country has the ability to know that this has come from a PFRDA stable. This has come with the ring of truth that a regulator is saying this kind of information has been parsed through the set of information products, the set of returns of various pension funds, the rules and the regulations of the regulator, and that's why it is more correct than something else. So I think there's nothing called perfection, but the fact is that if I can actually say that it is explainable up to 80% or 90% and not just explainable up to 50 or 60%, I think that difference people will soon start appreciating. And we have the possibility of providing this kind of advisory services to just about everybody. So that is really one of the larger projects that we are taking up, and I'll be more than happy to see if people, can come up with, frameworks or design aspects of how this particular thing should work. But it really brings me to the whole concept of how personalization is really, I think, a big sort of, a factor that will move products and services as we go forward. And of course, the simplicity of a product is here to stay, and the more simple we make it, the better it is for us. Let me just finish off with the last point that what really is what we call as a security redressal paradox in the pension space is the intersection of fintech innovation and long-term financial security. So money moves instantly and payments are settled in seconds. The engineering of real-time transactions is one of our generation's greatest technological achievements, yet onboarding remains cumbersome. Financial planning remains complex, long-term wealth accumulation remains difficult for millions of citizens. The same citizen who can receive a payment in 4 seconds may require 4 hours to understand a pension contribution or a retirement projection. This is the paradox. We have applied our best design thinking to transactions, but we have not yet applied it to life outcomes. Bridging this gap is one of the most important design challenges in emerging economies today. We had a great hackathon some time ago, and I remember one of the young boys, and as he said, these are boys and girls sitting in campuses who are creating these products, and they simply brought a visualization of what am I today and what I may look like 40 years from today. And the conversation was really between me today and me 40 years later. And it simply tells you what all you have probably not thought of in those 40 years. And to be able to reach a particular state 40 years later, this is what you should be doing today. Now, this kind of visualization is so much more intuitively acceptable. It's something which people get personalized into because they feel, oh, I'm talking to myself 40 years from today. Now, I thought it was just brilliant for the fact that you can have a conversation between yourselves, across time. And the impact of that is so much greater on myself today, because one of the most difficult things to do is to join a particular product. So whether I should join EPF or NPS, today EPF is no longer that tyrannical structure which a Provident Fund Commissioner's office comes to each corporate and says, you haven't paid up. Now we know how this country runs, that's the way it is, but things are changing. So today the EPF is such that there is a minimum amount that you have to pay under EPF, which is all of 12% of 15,000 rupees, because EPF was designed to take care of persons who earned less than 15,000 rupees in a month. It was never meant to take care of persons like you and me. It's a different matter that it became, in practice a bit different. So the tyranny, and I'm going back to Arun Jaitley ji's budget speech of 2016, where he said that India is being held hostage by the EPF. And we need to have a situation where there is choice between an EPF and an NPS and whatever other product that comes out. And this is really the whole point, that how do you get people to appreciate for themselves, for their own benefit, what next step they need to take to make their finances secure for the future. Even today, it was there 15 years ago when I was in SEBI, where we had all these Ponzi schemes. There were people collecting money for teak and shrimps and all sort of things, which after 1 year you'd sort of see that they've all disappeared somewhere. Even today, a lot of people in the rural households are attracted to double your money and triple your money in 1 or 2 years, and they're still falling for it. Now that, I think, is a pointer or a reflection of the inability of a regulator like ourselves to have gone into that space and got them away from looking at that and saying, okay, you're not going to get 50% return, but you're going to get 16% return, but this is at least more stable. It's going to take 5 years and not 2 years. But that narrative we still have not been able to completely solve for. But this is the whole point, that we are in a situation where we are transactionally getting more efficient, but strategically, in terms of our long-term vision, in terms of our long-term goals, we probably need to do that much more. So, listen, great, speaking to all of you, and thank you so much for hearing me out. But I honestly believe that this interface between financial products and financial processes with the kind of critical thinking and design that you are talking about is really going to go a long way tomorrow. Thank you so much.
Thank you very much, Mr. Raman. And just to make up for that slip, I would like to tell you that most of us have an NPS account built into the university system. But thank you very much. I think it was, as you said, very simply, you put how design, financial aspects, and really inclusion is all should be a part of how we go ahead in this geography that we are. So thank you very much for setting it out. There is a small video.
इच्छाओं की कोई उम्र नहीं होती, आज हो या कल आंखों में हरदम चमकती, कल भी रहे आज के खान, ना हो टेंशन टाइम के बाद, no टेंशन। हाँ करनी है तैयारी एनपीएस जरूरी है, करनी है तैयारी एनपीएस जरूरी है। कल करे सो आज कर, रिटायरमेंट अपनी प्लान कर, एनपीएस में इन्वेस्ट कर, छोटे छोटे इन्वेस्टमेंट से कर तू शुरुआत, बड़े कॉर्पस अमाउंट की मिलेगी सवाल। हाँ कल भी रहे आज के खान, पाओ पेंशन 70 साल, चलती रहे की बारी एनपीएस जरूरी है, करनी है तैयारी एनपीएस जरूरी है।
Can I have our students, Aditi and Dunita, to help us with the mementos, a token of appreciation that we would like to give all our guests. And I request Dr. Das and Professor Kalkur to please come and do the honors. Sanjay, come. Can you just... Raman, would you please accept a round of applause for his presence and his Mr. Bala Subramaniam, would you please come? Shibu Sebastian. Mr. Akshay Bapte. Thank you for being here. Sorry. It's outside. It's outside, but it's outside. No. Thank you very much. I would also like Dr. Das, sorry I make you get up again, but could you announce the conference proceedings, which Sanjukta has asked me to ask you?
Surprise. So, what do I have to say? Conference proceedings open. I have to open it.
Okay. And now we have Sanjukta Ghosh, Dr. Sanjukta Ghosh, who's been working really hard with her team, including Nirit and everyone. Please, the vote of thanks.
Thank you, Priya. Thank you, everyone. It's my proud privilege to propose vote of thanks on this conference. On behalf of conference organizing team under Institute Innovation Council, Srishti Manipal Institute of Art, Design and Technology, MAHE, Bangalore, extends sincere gratitude to everyone who has contributed significantly to make this event happen. First and foremost, I express my heartfelt gratitude to our chief guest, Shri S. Raman, Chairperson, Pension Fund Regulatory and Development Authority, for his valuable speech and also enlightening us about the importance of elderly security, which is so important as we age and as we move forward. So I would also like to extend my sincere appreciation to our keynote speaker, Professor M.H. Balasubramaniam, Department of Management Studies, Indian Institute of Science, Bengaluru. Thank you so much for all your advice, and he's the person when I thought of the conference, I went to him and get his advice of organizing multiple events like this and how do we take this forward. Our sincere gratitude goes to our platinum sponsor, Canara Bank, for all your support you put forward to us and make us for your generous support and partnership. We are equally thankful to our gold sponsor, HDFC Pension Fund, our silver sponsor, Aditya Birla Capital Pension Fund, Pension Box, a startup initiative who is taking the first, I came to know that they are the first startup in the domain of pension, who has supported, who's significantly and being instrumental in making this conference a success. I would also like to acknowledge our ecosystem partner, NSR Cell IIM Bangalore, and express my sincere appreciation to Mr. Akshay Bapte, Program Manager and Campus Founder, NSR Cell IIM Bangalore, and the entire FinTech Center of Excellence team for their valuable collaboration and support for this event. A special gratitude goes to Mrs. Geeta Bose for establishing this meaningful collaboration with NSR Cell IIM Bangalore and been working to make this happen. I would also like to thank Dr. Jagriti Bhattacharya for her continuous support in planning this event and agreeing to moderate the panel discussion, which we will have post-lunch. I extend my heartfelt appreciation to Mr. Shiva Mehta, founder of Maximize Money, and Mr. Siddharth Uttam, founder of Cubera Club, for sparing their valuable time and share their entrepreneurial journeys and insights. We are eagerly looking forward for this session, which will happen live, which will happen after the lunch, and it will be live streamed to inspire our young minds to pursue the journey of innovation and entrepreneurship. I would also like to express my sincere gratitude to our distinguished national and international speakers, including Professor Manish Arora, Head of the Department of Applied Arts, Faculty of Visual Arts, Benares Hindu University, Dr. Priya, Senior Data Scientist, Advanced Analytics Modeling from Scotiabank, Toronto, Canada, Shri Rishabh Rishi, Engagement Manager, Global Consulting Practice, BFSI, Tata Consultancy Service based in Sydney, Australia, for sharing they will be sharing their valuable perspectives on the evolving landscape ecosystem in the domain of FinTech and its impact on social impact. My heartfelt thanks goes to Dr. Arindam Das, Director, SMI, and the Chair for this conference, and Professor Ramesh Kalkur, Associate Director and Co-Chair for the conference, for their constant encouragement, guidance, support throughout the planning and execution of this conference. I would also like to thank Dr. Raghavendra Prabhu for his constant cooperation and support to make this event happen. My sincere appreciation goes to Professor Neeraj Alva, Professor Sujata Ramesh, Professor Prayag Prakash for all their support in organizing this event. A very special word of thanks goes to Professor Vikram Pal, whose tireless effort, commitment, and continuous support have been invaluable in making this conference happen from its inception. I would also like to thank Dr. Priya Joseph for all her support and graciously accepting the conference to be anchored, especially the inaugural session. I would like to thank and appreciate our undergraduate students, Nikhil Kumar and Shriya Gopal, for their dedication and hard work over last few months in creating all visual communication materials for this conference. Their creativity, commitment, and meticulous effort have played a significant role in shaping the conference identity and ensuring successful outreach. I would also like to thank Mr. Mahesh Bhatt for all his outreach support that he extended for this conference. I would like to thank Mr. Anand for his unwavering support throughout the event for last few months. My sincere appreciation extends to all office staff, all IT staff, especially Guru who is there today with us, all SMI and MAHE staff, finance department, audiovisual team for seamless operations. No academic conference is complete without research. I extend my heartfelt gratitude to all authors who submitted their research papers. Your scholarly contribution are the true strength of this conference. We are happy to mention that around 40% of the submitted papers successfully cleared initial evaluation and have forwarded to Springer editorial team for their peer review process. I would also like to express my sincere appreciation to Professor Sachinandan Mohanty, whose valuable academic collaboration with Springer Nature made this conference happen. With this, I would like to take the opportunity to thank Mr. Madhusudan D, TMFI research scholar, who have been diligently working for last few months to manage the round of first level of selection and review process. Mrs. Shivangi Agarwal, a full-time PhD research scholar, for providing necessary writing support and guidance needed for the authors. Now, I move towards organizing and planning the tracks. I would like to appreciate the sincere contribution being done by our Master Students of Design-led Innovation program, Duhita Srinivas, Aditi Puten, Isha Ilsurkar, and to manage the entire conference track process. Along with them, I would like to thank Rushal Nandeshwar and Gibran Salim for all necessary support and coordination needed for the conference. I will convey my sincere thanks to Ms. Anshu Darbari, for anchoring the conference track protocol and the process with Duhita and Aditi for today and tomorrow. I would take the opportunity to thank all the track chairs, Dr. Indranil Shaha, Dr. Subramaniam T.A., Dr. Nabendu Pal, Dr. Manjari Singh, Dr. Harini Santanam, Dr. Kiranmay, Dr. Mohan Sitaram, Professor Anil H.A., and I am being grateful to all of them for being accommodative enough with my last minute request. Finally, my sincere thanks goes to all the participants and delegates and the research member who managed to take their time and attend this conference and make it a successful event. I would also take the opportunity to thank Swarup Sardeshmukh, accompanied by Pandit Gurumurti Vaidya, to present a musical recital as a closing ceremony for this conference. With this, with all my gratitude to each one of you, I conclude my vote of thanks. Thank you.
Just the very last announcement, please join us for lunch on the ground floor. Thank you, everyone.
Thank you.
Thank you.